So you've been studying price action a lot, but now what you lack the most is a plan on how to trade it. In this video I'll teach you exactly how to make a trading plan, more specifically for price action, how that works, what rules you have to include and stuff and what parts, and we'll do this very simply. So without further ado, let's get into the video. So guys, what's up and welcome back to Bangkok. I get a lot of questions about trading plan, but I see a lot of people now that want to do this with price action. So I've done videos in the past about how to create a trading plan. That's something that's quite simple, not hard to do at all, very easy. But what happens if you want to do price action, if that's your goal? Now most people will make the mistake of, if they trade price action, not having any plan. They say, well, price action depends, I'll look at what I do when it's time to do it. And that really works well. So what you want to do, you want to be very careful, is you want to create a plan first, and that plan will guide your ideas for later. Remember that having a plan that's done is always much better than a plan that's not done at all, okay? Even if it's not perfect. So here are some things that I want to go through. There's going to be like 5 parts to go through. And first things first is I want to go to some trading plan basics. Then we'll go to how to look at the market with price action a little bit. Then how to do exits, which is really important. Most people know how to enter, but they fail when it comes to exit in the market. And then some risk and money management rules or tools you can use. And lastly, the implementation plan. Okay, so take note if you want, and we'll go through this over time. So first things first is I want to cover some basics of what's a trading plan and why do you need one. Well, as I said before, trading plans are kind of important to trading. Like you need them as soon as possible if you don't have one, because it's a plan. And what happens with the plan is you do the plan, and at the end you can go back and say, well, did that plan work or not? Okay, and if it works, then awesome, you're good, just keep going, do the same thing over and over again. If it doesn't work, then correct it and make it better. Okay, and adjust over time and ensure that whatever level you start now, you will become better. Okay, that's what a trading plan is for. It's not to force you to respect your style. It's to help you out figure out what works and have a set of rules for what works. Now, if you decide later on to do something against your trading plan, understand that it might not work, and that you have this plan that works. Okay, and that's pretty simple. So if you don't follow your plan, then chances are things they might work or they might not work. Okay, and if you want to make money, if that's your goal, to be able to live and have a lifestyle you want and stuff, then you better follow your plan, because that's going to be the best and most reliable way to make money. Okay. So that's the first thing. Now, a trading plan, very important to understand. It's going to include a few different parts. You're going to have your setup, you have your entry, your exit. You also setup, entry, exit, pretty simple. That's basic. If you don't know this, then we have to go back to the beginning. But those are the 3 major parts. Now, in addition to this, you will have some tools to execute better. So things like money management, risk management, right? Things like implementation plan. Things like your vision. These are all kind of tools to put in addition to your plan, to make your plan better. They don't really kind of are based on what you will trade on a daily basis. There are more things that surround your trading, so that over time you become better. And that you have ways to grow and improve and become better, of course. Okay? So that's it for the basics. We'll get back to those basics a little bit later. Okay? Now, we need to understand in part 2 how to look at the market for price action. And how you look at the market, it's going to be the basic structure or basic breakdown of your trading plan. Okay, so for example, now I've been teaching this for a long time. It's something that's not new at all. It's something that you should know about if you're watching the channel a lot. But if not, I just want to kind of go through it quickly and show you the basics of how that works. Okay, so anytime you look at the market, I like to apply what you call a top-down analysis. And that's something that people use for kind of like different time frames. But I also use this to kind of build confidence. So go through different parts, different steps, until I get to having a good trade. Okay. So in short, that's something that's going to look like this. Okay. Imagine like a filter, and imagine like something that goes through, and then you will start here with like a lot of things, a lot of particles or data or trades, ideas, and then once you get kind of closer, then you have only kind of like a few ideas. Okay, and until you have like one good trade that's been properly done, and then you can take that trade. Okay, because you have all the rules that make it a good trade and that make it worth taking it for you. Okay. Now once we're there, now we want to look at some things throughout that. We have some rules, and here I won't be sharing like particular rules, because you should have your rules. You have your tools that you're referring that you like, and I have my tools that I like. Okay, and that's going to be different for you and me. Now you pick whatever you are comfortable with, whatever you want to use. You test this out. But I want to share with you the framework around how to trade price action. Okay, and it's going to start with this, the market context. Okay, so market context is you need to have a way to look at the market and what it's doing right now. Okay, on a bigger picture. That could be for you like a fundamental view of the market, like the news and everything. I would not recommend that. Or that could be something like you look at the market phase. Okay, in my case, we call this the market phase. Market phase. Okay, and so that market phase tells you to kind of look at two things in the market. So you look at sideways market, okay, which are going to be kind of like ranging market like this, and then look at trending markets. Okay, now you can have your different rules for that. It doesn't really matter. You look at whatever you want to look at, and whatever you've learned in the past that works, use that. Okay, it's totally fine. So then trending market, and then you can have like of course these constellation market here. And then you could have, of course, your trending down market. Okay, that's totally fine. So that's what I look at myself for the market context. And then I know, based on that, what I'll be trading. Okay, let me just zoom this out here for you so you can see the whole screen. Okay, so that would be it. Okay, so you'll be seeing basically these sideways market, then uptrends, consolidation, then downtrends. Okay, that would be it in a nutshell. Now, next thing I want to look at is I want to look at what's going to be the second factor you use to trade. Okay, so you've got here your market context, and then think about what you're going to be looking at to take a good trade, and what will make the market give you an edge. Okay, so for me, the second step would be, and that will be the most thing for most price action trader. The second step is the zones. Okay, look at the zones in the market. In my case, and there's like many zones you can look at. There's like trend lines. Trend lines could be one, where price moves in a trend line. Okay, it's pretty simple. I don't personally like trend lines. There could be something like, for me, it's going to be support and resistance or horizontal. So price moving between support and resistance. So you have things like this, and you have things like this, and these are zones to look at. Okay, these zones where the market is likely to bounce could be a good place to look for bullish or bearish trades in general. Okay, and that could be an option. It could be zones like Fibonacci. So you have a trend. Okay, and don't expect me to use Fibonacci. I don't really like the tool, but you have the tool, then you look at whatever this is. This is the high, then Fibonacci, then you 61.8 level here somewhere, and that's the zone to look for a trade. Okay, that could be it. That could be something of the sort. So there's many ways to go about things. Just find out the zone that you want to trade in the market, whatever tool or tools you want to use, and then go with that. Okay, and then it comes down to your price action factors. So we'll call this like PA1, and then PA2. Okay, then you can have more than that. So you can have 3. I would not recommend to go with like 3, 4, 5 because that's too much. But 1 and 2 is not bad. So let's say you have here like candlesticks. So you look at candlestick patterns, whichever candlestick pattern you found to be good in the market. I personally like the Bollinger Band. I would use Bollinger Band. Okay. I personally use engulfing candles. So whenever price is doing this candle like this and engulfing the previous one, so something of a sort. Okay. And that's kind of like a pattern I like. So it could be different for you, of course, but that's one of the patterns I like. And then you can use whatever pattern you want, whatever candlestick pattern you want, or something else. Then price action pattern number 2 could be something like you look at the impulse, so the moves, or the moves like, let's say price will be, let's say in this market, or the moves like this. Let's say price moves here, or the move like this toward a level, or the level is here. Or the moves like this. Okay, One is going to mean, well, this one is probably not likely to bounce back quickly because it's a little bit too not strong enough, not enough buyers and sellers on the market. And this one could mean, well, it's going to bounce quickly because it's moving down quickly, could go back up quickly. This could also mean that it's likely to break down. Okay, that's kind of from my experience, of course. You can see things differently, but what I see is that this could break down, and then you could look for a pullback here in the trade. Okay, or it will be more likely at least to reverse like this quickly, as opposed to this one might do something like this, and then kind of like waste your time. Okay, so that could be a second factor, and then with that, you could build a pretty strong case of trading price action and having a plan that guides through the setup you want to trade with price action. Okay, and your entry with this would be determined by yourself, of course, but figure out a place to enter, and that's kind of in a nutshell the process, the analysis you should go through to be able to place trades with price action. Okay, which you're going to include, by the way, in your trading plan, of course. So that's what I mean by structure of analysis. Okay. By the way, if you're looking for a template on how to create your trading plan, I've put out together a while ago a one-page trading plan template. I've been using this for a long time myself, and it works really well compared to these like really complicated, tough, and messy trading plans. So I'll put a link below for that if you want to grab it. It's free. You can kind of do this, print it out, fill it in on your own time, and that's going to help you out a lot. Quick reminder here to subscribe on the channel if it's not done yet. I publish videos like this to be able to help you guys get more freedom to trading. My goal is to see you travel, go around the world, do whatever you want to do in your own time, and have the freedom to go wherever you want, do whatever you want when you want to do it. So that's my goal. So I provide you tips and interviews every week, and so I would love to see you here more. So subscribe if it's not done yet, and now let's get back to the video. Third step is I want you to understand exits. Now, it's one thing to enter the market. People all put all the focus on entering the market. I want to enter here and there, and this is an optimal point to enter. And this is my setup, and I enter the market. But they kind of forget that they have to exit. And they say, well, if I enter right, it's going to be a good trade. But that's only like a third of the battle. So you want to be able to know how to enter, yes, of course, but how to exit. That's the second important part, okay, that you will need if you want to become a profitable trader. And even more so if you want to improve and become a full-time trader. Okay? So, exits. There are a lot of ways to do this. I'm going to share this with you guys right now. So when it comes to exit, I want to share with you two things. First of all, how to take profit. There's many ways to go about it, of course. And then I want to share with you about stop losses, how to exit when you're in a loss. And the best thing is, of course, to test them out, to see which one works best for you, which one you like the most, and then use that. Okay? The first one is going to be with a fixed reward to risk. So you enter the market, you say, well, my stop loss is this, and I will exit at when price reaches 1 times this, or 2 times, or 3 times. Okay, pretty simple. The second option will be that you look at highs and lows, and you decide, well, based on how the market moves, I should exit at this point. Okay, if you're a good price action trader, you can know that. If you're not a good price action trader, then maybe you go with the first one, with fixed reward to risk. Because this one is kind of hard to guess if you're new, and you have to have some experience with that, of course, and maybe some data. And then later on, you can move to high and low point. The second one is near support and resistance zone. So a little bit similar to the highs and lows. You look at the zones in the market, other zones that price could stop at or change kind of context at, and then you'll be getting out near these zones. Not at the zone, but near the zone, just to be safe. Okay, a little bit before the zone. Other one is going to be with round numbers. You can have a good idea of what to exit when you look at round numbers. Pretty good idea. And the other one is having multiple take profit. So a take profit at 1 to 1, 2 to 1, 3 to 1, or maybe a take profit at the round number and 1 at the next zone, or maybe 1 at the next zone and 1 at 3 to 1 reward to risk. Okay, so multiple take profit. And those are kind of ways to take profit. Now I want to share with you now ways to take your losses, because those are as important as where you take profit, of course. So beyond highs and lows. So let's say you enter the market, price makes a high, you put your stop loss behind that high. Okay, when you enter the market, good way to place a stop. Or ATR based, where you look at the ATR plus where the price is right now. So if price is at like 1.05, look at the ATR, which is going to give you 100 pip, for example, ATR for like 15 period, and then your stop loss will be at like 1.06. Okay, so plus 100 pip, something of the sort, or it may be 2 times the TR. Okay, if you are trading like really big ranges or something, you decide, you do your calculation on this, but that's a good way to do it, and you have to test them out, of course. And then beyond support and resistance areas, good place to place your stops, because if price is going to break that zone, chances are that you're wrong and you want to exit the market. Okay, or the other one will be beyond retracement point. So if, for example, if price makes a retracement in a trend, then move your stop loss there, or put your stop loss at the last one, and then maybe move it later, which is what we talk here about trading stop loss. So stop loss that you move over time as the market or the pair gets in your favor. Okay, so those are things. Those are kind of ways to take your profits and your losses, and let's continue on with the other tips. And that's pretty much it for exit. Now the key point here is that you want to be able to kind of test these out. Maybe take a screenshot of the video if you want, and make sure these options for you available, and then test them out. Test which one you prefer to trade yourself, and which one will work best in the market. Okay, there could be many, there could be one, it depends, but test them out for your style, and then come back and make a good decision. Okay, that's all there is to it. And now I want to talk a little bit about risk and money management, and that's something that I am not the expert at. I understand the basics and I implement it right in my trading, I believe. We've done videos on that in the past, so I'll just link some videos below for you guys to check out with Michael Tama, which are awesome. Michael is a really kind of professional guy and a pro when it comes to risk management. But for now, I just want to say this. It's not because you're confident or because you think you're a master at trading that you can risk more on a trade, or that you can go all in or gamble your account on a trade. Okay, if you think you're a master, fine, but that should not affect how you trade. That should only affect your brain and the chemicals in your mind, and that's fine. Other than that, nothing else is supposed to happen. If you feel or if you tend to gamble or get into bigger trades when you win or when you lose, that's not right. And that's something you want to define at first. What are really your rules regarding risk management and money management? And also you want to calculate your risk of ruin. Now, the risk of ruin is a measure of how likely you are to blow up your account in trading. And all the people that blow up their account, they all have a risk of ruin of more than zero, like maybe 5%, 10%, maybe 50%, because they're dumb a little bit at first, which is fine. You become better over time. But that's the thing. So if you don't have a proper risk of ruin of 0%, then you're risking blowing up your account. Okay? I've never met anyone that had a risk of ruin of 0%, respected all the rules, and blew up their account. I've never met anyone. And if you are one of these people, then comment below. You're like one of the few, or one of the only, and I would love to talk to you, because I wonder why you blew up your account. But if you didn't respect your rules, or if you did not have a risk of ruin of 0%, then no wonder you blew up your account. That's just normal. Okay, that's life. You do something, you take bad decisions or bad money management rules, then you blow up your account. Okay, it's a cause and effect. So that's something you want to avoid, you want to prepare for. Okay. And lastly, the fifth point I had is whenever you do a trading plan, on price action, on anything you decide to do a trading plan on, you want to be able to define how you will implement it. So like just let's say, for example, you have this plan today, this price action plan, and then you go in the market and then you trade it. Then you trade it, then you trade it day after day, week after week, month after month. But the thing is, how do you scale up? How do you kind of level up? Or how do you adjust your plan? Okay? Or when you move from demo to live. Those are all things you got to think about in your implementation plan of how you will implement your plan. Okay? If you don't have a plan for this, chances are you will always stay at the same level and you will not progress. And of course, that's not what we want to have. So create this plan where you kind of have this step-by-step process of how you will move forward, what things you will do, and then go and trade your plan live in the market. Start wherever you want to start, and then go forward slowly, okay, incrementally. Now, it would be a bad idea to take a plan that you create, your first plan, or even your second or third plan, and then put like $200K on that plan. Okay, $200,000 that you trade with for that first plan, or that second or third plan. That wouldn't make sense. So you want to be able to kind of have a rule or a plan to move forward. Okay. So guys, those are like the 5 main points I want to talk about here. So the basics, we'll talk about those. Structure of analysis, go back if you want to kind of review that. And exit types, of course, really important. Money and risk management rules. And finally, how to implement your plan. Okay. Now in conclusion, I want to say one thing. As I said in the beginning of the video, a plan that's going to be done is much better than a plan that's not done, even though your plan is not perfect. So start with something, test it out, and once you do that, then you're able to know whether your plan works or not. If you do a plan that's like a crappy plan and you go in the market and it doesn't work, well, at least it doesn't work. Like, you know this plan doesn't work. Now make a plan that works, make it better, and tweak it so it works. Okay, it's going to take some effort, some time, but that's why you should have a mentor, of course. You should have people around you that help you to reach higher and higher level. Okay, but that's the principle. So once again, guys, subscribe if it's not done yet. There's a video like this 4 times a week. We had a great interview recently that I'll put the link below for that if you want to watch it. And comment below with your thoughts as always. Here are a few comments from the past video. I appreciate you guys for leaving your comments as always in the comment section down below. And I'll catch you back here for the next video. Ciao.